is down 15% on Thursday and now it's trading at $35 per share. On this video, I'll give my point of view on whether the company is undervalued or not. Here is the video format. First, I will explain why the stock went down 15% at Thursday and why it's down already 50% in the last 3 weeks. Then I will talk about the revenue guidance for 2025. And lastly, I will give my point of view about what do I think going to be a fair price per share for Hims and Hers. Everything I say over here is not a financial advice. Please make sure you do your own research. So the stock is down 50%, and that's because there is high uncertainty regarding revenue they will manage to generate from weight loss medication in 2025. The uncertainty is due to the FDA announcement that there is no more shortage of semaglutide. Semaglutide is an ingredient that Hims and Hers use in their weight loss medication, and the shortage is the only reason they were allowed until now to create their own version of weight loss medication. And now, when the shortage is gone, they cannot create weight loss medication and sell them the way they did until now. Also, on Wednesday, the company took a hit after Novo Nordisk announced that it would offer Wegovy to uninsured patients at a discount rate. And Wegovy, that's a medication that competes directly with the medications that Hims and Hers sells. So that will probably affect as well the revenue that Hims and Hers are going to be able to generate in 2025. So now let's try to understand what can be the effect on the revenue for the next coming year. Now the company projects that revenue for 2025 is going to be between 2.3 to $2.4 billion, and that includes the anticipation for revenue that will come from weight loss segment that will be approximately $725 million. So basically the company projects $2.3 billion of revenue. Of that, there is $725 million that will come from weight loss products, and that regardless of the problems they are facing from the FDA side, which we just talked about. Now, what Hims and Hers intended to do is because they can no longer offer cheaper compounded version of weight loss products, they are planning to shift to selling branded medication and potentially increase pricing or volume to make up the lost sales from compounded medication sales. Or in simple words, they won't be able to sell the cheap version of those medication, and now they're going to need to sell a much more expensive version of those weight loss medication. So analysts are skeptical about the projection of $725 million because up until now they have been able to offer weight loss medication at floor prices. And now when they shift to brand medications, they will have to raise prices and patients might go look for cheaper options elsewhere. So analysts project that they could lose a large number of customers who originally came for the affordability of the weight loss products that Hims and Hers offered up until now. So even though Hims and Hers projecting growth of revenue, because in 2024 they have generated $1.5 billion and they're projecting around $2.3 billion for 2025, there is still a real risk that the weight loss revenue in 2025 will fall short of expectation. So now let's try to get to a figure, get to a number of how much revenue they will be able to generate in 2025. So as I said, the projection is $2.3 billion and the projection of revenue from weight loss products is $725 million. Let's assume that they won't be able to sell any weight loss products, which means the revenue from weight loss products is going to be zero and the total revenue for the company is going to be around $1.5 billion. I think that's not a reasonable scenario, but let's take it as the worst case scenario and use that. Now the next question is whether it's going to stop there or the entire revenue of the company is going to be affected. I mean, there is an option that they will also lose revenue from non-weight loss products. So let's think about it for a second. Many people who signed up for Hims and Hers did so for the affordability of weight loss products. Now, if they cancel their subscription entirely, Hims and Hers might lose customers that also purchased other products like hair loss products or mental health or skincare. For example, a customer joined the platform originally for weight loss products and afterwards he decided to also use the hair loss treatment. Now that the weight loss products won't be available at the same price, he might decide to unsubscribe and that will lead for revenue loss from both weight products and hair products. So if we look at the average price to sales ratio in the past 4 years, we can see it's about 3. So my conclusion, to get to a fair price for share for hims and hers, we should use a price to sales ratio of 3.
So if we're going to take $1.8 billion and multiply it by 3, we are going to get to a market value of $5.4 billion. Now if we divide $5.4 billion by the current market value, which is $7.5 billion, we're going to get 72%, and we can multiply that by the price per share as of now, which is about $35, and that's going to get to $25 per share. So I believe that the stock should go further down, and fair price per share should be somewhere around $25 per share. So as I said before, make sure you do your own research before you get to a conclusion what should be a fair price per share. I hope you enjoyed the video, and I will see you in the next one.